And over now to the NASD OTC, where the US high of that market continued to wax stronger. On Thursday, it closed 1.29% uptick, having ended at 614.22, with a market capitalization of 415.66 billion naira, inching higher by 1.24%. Volume came in at 555,098, down 73.38 points, while the value also dipped 75.29% against what was transacted midweek, which is Wednesday, and the deals is put at 25, up 56.25%. Top traded securities include Afriland, that's appreciated to 3 naira 70 kobo and had the volume of 22,508. Air Liquide also continued to garner the attention of investors, while CSCS ended at 6 naira 54 kobo, having had 498.270. Let's quickly take a look at the FMDQ OTC, where system liquidity was negative this week. We see the 2021, 2024, as well as 2036 securities, FGN bonds specifically, having just those numbers that you have against the value of 19.90 billion naira for the July 2021 and March 2024, 2 billion naira. Total deals is 228 and total value is 27.90 billion naira, and that's amongst all the tradings. In terms of treasury bills, where the sentiment was not so positive as well, we have the 29th of June, 15th of June, and 19th of October this year, securities having more transactions from investors. Let's check what we have from the African markets and specific focus on our own. Kenya, despite Kenya's GDP growth that is projected by the World Bank to decelerate by 5.55%, 0.5 percentage mark down from the 2016 forecast, the domestic stock market firmed up this week, and that is because the projections are based on the predictions that ongoing droughts, which has led to crop failure, dying herds of livestock, and other major indicators like increased food insecurity, as well as marked slowdown in credit growth, will be impacting that economy. But despite all of that, we still see the market waxing stronger, easing out of the negative territory that it had been in terms of year-to-date performance, standing now at a positive of 1.31%. And the same thing goes for the Egypt stock market, the Johannesburg Stock Exchange, and save for the Ghana Composite Index, which was down this week by 0.21%. So the inability of foreign investors in the Nigerian capital markets to repatriate their investments or dividends based on the shortage of FX has led to the reinvestment of those dividends in the equity markets, while an exit alternative is being expected to be designed by the Central Bank of Nigeria. The question begging is how good or bad this development has been for the market. And of course, Dolapo Ashiru, CEO at Lead Securities and Investments Limited, joins us now to discuss this matter. Thanks again for coming through, Dolapo. We appreciate it.
Thanks for having me.
Okay, so let's take a look at this trend in the markets. Is this good for the market or not?
It's not good for the market, because one of the signs of an effective or an efficient market is the ability for investors to leave, enter and exit the market when they want to. So if you're an investor and you can't take out your dividends, you understand, it affects the integrity of that market, of that country.
I agree with you, but we've got a lot of domestic investors now surpassing the participation of the FPIs in the market.
Yeah, and the market is also down. You have to understand that. And the turnover of the market has been, in the past 3-4 years, has been inching downwards because of the slowdown in the influx of foreign portfolio investors into the Nigerian capital market. So it's a concern for us, even as a stockbroking community.
So what you're saying is, if we're able to create an exit route for the FPIs to move, we're likely to have the 25,000 psychological level that we are right now, dipping to like 24,000 or even 23,000?
No, it's a big. The issue is bigger than that. The issue is, first of all, foreign investors need to be sure that once they bring in money, they can also take the money out when they want to take the money out. So the issue is that we need to create an efficient FX market where demand and supply will have its way. You understand? So if, for example, you tell me that Dolapo, you can come to this studio anytime you want to, but you cannot get out when you want to, I don't want to come to this studio. So you have to ensure that foreign investors can come in with their money and go out when they want to go out on their own terms.
So in essence, all of the interventions that the central bank has been carrying out lately has not had any impact on the markets.
Yeah, it has, but no major impact. So CBN has done well, but not well enough. They need to do more. For example, with all this, with all the circulars coming out and all the moderation in the prices, I mean the conversion between the FX price and the official and parallel market is good, but foreign investors, even local investors, want an efficient FX market.
So in terms of the exit route that we are expecting the CBN to design for these guys, what are you expecting? What kind of exit route are you, what window are you looking at?
First of all, there's a backlog in dividend warrants for foreign portfolio investors. So there's a backlog. They're not going to, yes, they're repatriating their dividends, yes, but not at the pace at which they want to. So they can repatriate the dividends, but there's a queue for that. So it's just to fast track the backlog. That's what CBN wants to do. Yes, it's good, but we prefer a more enduring and sustainable framework, which is to, first of all, have a unified exchange rate, create a market where demand and supply will hold sway, where you can have proper FX price discovery.
So if the dividends routes, the exit route was created, where will we be having the market at the moment?
Yeah, it could cause the market to dip a bit because many multinationals, for example, the parent company, when they're having issues in quickly repatriating their dividend, they say instead they instruct their brokers to use dividends to buy more shares of that company.
Okay, Dolapo, let me quickly interrupt you because it's time for break, and when we come back, we'll continue the discussion around the demutualization of the Nigerian Stock Exchange. Stick around.